Ladies and gentlemen, we have a lot to unpack here in this video when it comes down to SoFi. We are seeing via the institutional investors 13F filings that they are loading the boat with SoFi shares. And when I say loading the boat, they are damn near sinking the boat with as many shares as they are buying. Some of these institutional investors loading up over 800% increases in their SoFi share positions. So that's very exciting. We're going to break that down. We're going to go over the option flow and just how bullish that is. We're going to take a look at the short squeeze aspect of this investment as well, because the short interest has been exploding. And I want to give you guys a timeline on when we could see a reversal in SoFi stock, as well as any other small and mid cap stock that is highly shorted as well. We are also going to be going over the charts and a bombshell news headline that we are seeing from Fed Bostic that says if inflation data is bad, February 10th and March 10th. At the FOMC meeting, March 16th, the Fed might raise interest rates by as high as 0.75%. We are currently expecting only a 0.25% rate hike increase. So I want to drop all of this information on you guys. Do me one quick favor. If you're watching this video and you own SoFi stock, hit that like button for me. Comment down below, how many shares do you own of SoFi? Help boost this video out to as many SoFi shareholders as possible, and consider subscribing to the channel in the process. But without any further ado, let's dive into this video. First and foremost, before we get into all of the key information you clicked on this video to see, I do want to give you guys a brief rundown on what to expect for this upcoming week. So all eyes are still on earnings. We don't have any major big companies reporting earnings on Monday, but on Tuesday we do have Google reporting in after hours, AMD in after hours, Starbucks in after hours, GM in after hours, and PayPal in after hours. PayPal is likely to move SoFi as they are in somewhat of the same realm. Wednesday, we have Facebook in after hours, Abivai in pre-market. Thursday, we have Amazon in after hours, Ford in after hours, and Snapchat in after hours. These are some of the larger companies and what is really going to dictate market sentiment until we get to February 10th. That is the next CPI reading. If this comes in super hot, super high, then I do expect a much more hawkish Fed at the March 16th press conference, where we just seen that happen the last couple of days. Fed Jerome Powell gets up there, gives a speech, and answers questions, and those questions really dictate what happens with the markets. We obviously seen a very negative reaction last time around, and this is likely to happen again. So what is the time frame to see a reversal in SoFi and a lot of these other heavily shorted stocks? Well, to be honest with you guys, from now until that March 16th date, if the CPI numbers come in lower than expected, I think that will give the hedge funds a green light to cover on some of their short positions, as a lot of these stocks like SoFi, AMC, DraftKings, Lucid, they're all down over 50% from their highs. So at one point, it does not make sense to continue to short these stocks when they've already fallen so much. And just like we seen a couple of days ago, you will see a secular rotation into these small and mid cap stocks because they are beaten down so bad. And like SoFi, a lot of them are under their fundamental valuations. So that's what we're going to say on that. We will get into what Fed Bostic did say after we go over the data that you guys need to know. So as far as SoFi and institutional investors are concerned, take a look at this. Just absolutely incredible. You could see that these green positions are brand new positions. The red are positions that have been 100% sold out of. But take a look at this. Mitsuo Markets Americas LLC increased their long position to 1.678 million shares, but the percentage they increased was 341%. This hedge fund increased their position by 111%. This hedge fund increased their position by almost 900%, bringing their total investment to 333,000 shares. This hedge fund increased their position by almost 200%, bringing their total to 94,000 shares. A brand new $1.5 million share position by Schwab. Another over 500,000 share position by Schwab. Again, 99,000 shares, 500,000 shares, 300,000 shares, 55,000 shares. And look, all of these hedge funds and institutional investors are loading up. Fidelity, here's another million shares, another 30,000 shares, $2.5 million share. 2.5 million shares from BlackRock, another 626,000 shares by Fidelity, 1.4 million shares by Russell Investment Group. They increased their position by 73%. So the story is very clear here. Institutional investors are loading up, damn near sinking the ship with the amount of SoFi shares that they are purchasing. Let's dive into the order flow and the sentiment here, and then let's get into the short squeeze aspect of this trade. So like we went over in the last video, over the past day, this was on Friday, we had 19 large orders totaling $5.01 million. The positive order value was 83%. So overwhelmingly high majority of orders that are going in by institutional investors are yet again bullish. Over the past week, 184 orders totaling $71.76 million with a positive order value of 71%. So looking very good in that aspect. And like we went over in the last video, we have some very large positions coming in from institutional investors. A lot of these for 2023 and 2024 at the lower end strikes, at the $12.50 strikes, some of them at the $5 strikes as well. And that's really what I like at the current moment is the January 19th 2024 $5 calls. You can buy these for roughly $600 to $700, and your break even is only like 50 cents or $1 higher than where we are currently at. So those will print massively once you do see a bullish reversal in SoFi that is inevitably coming, because SoFi is not a meme stock. I think a lot of retail investors have took a liking to the stock, but it's not a meme stock. This is a legit company with a strong track record and an even better track record to come in the future. Now, as far as the short interest of free float, we're sitting at 16.1%. This is very high. We're almost at 100 million shares that are sold short. We are seeing the cost to borrow max at 3.14%. So this is starting to trend in the right direction. And if you guys are unfamiliar, when short sellers take out short positions, they have to pay interest. So the cost to borrow dictates usually how long short sellers keep their short positions out on the marketplace. When the cost of borrow max starts to go up, like we have been seeing, going from about 2.3% now to 3.14%, it puts more pressure on the shorts to cover on those short positions. As far as the share utilization, which if the share utilization is at 100%, that means all shares that are available to be sold short have been sold short. So we're only sitting at 55.88%. So there is a decent amount of shares that still could be sold short, but it comes down to the fact of what's the fundamental valuation on SoFi. I think you could say, $15 to $20 is a fair value, overvalued probably $25 to $30 per share. But the price targets for analysts over the next year, the lowest price target is $16 per share. The median price target is around $22 per share. And the high price target is $30 per share in 1 year's time. So I think it's safe to say we are under our fundamental valuation. So at one point, it just does not make sense to continue to short SoFi. And I think at the very least, once we get earnings on March 1st in after hours, that's going to be the dagger in the coffin for the short sellers, and you're going to see a move to the upside. On that note, here is my position in SoFi. I had a quite a few comments in the last video asking me what my position was, and I have a total market value currently of $3,354. I am down 36.61%, down almost $2,000. Portfolio diversity of 11.4%. I own 300 shares at $17.64 per share. I do think SoFi could make its way down to the $10 price or even to the $8 or $9 price if we do see a total risk off move this upcoming week. I am looking to make a huge average down on my SoFi position. You guys can see I have about $9,000 in cash right now, and I am looking to deploy a lot of that here in SoFi, bring my average cost down hopefully to about $13 per share. I might go with some 2024 $5 strike calls because those are so juicy. If SoFi could make its way to $30, $40, $50 by then, those calls could print you thousands of dollars in profits. That's not even considering a short squeeze. That is just the fundamental growth of the business until 2024. So looking good in all aspects as far as institutional investors are concerned. Now let's take a look at the chart for SoFi, and we could see, let's pull this up. We can see that the chart for SoFi is not looking all so hot. On Friday, we did hit that low at $10.51 per share. During the liquidation phase of the day, we did rally towards the end of the day, but we still did see us touch that low at $10.51 per share. The volume has been extremely elevated ever since the bank charter was approved, and you can just see people are loading up on SoFi. We actually did hit a high as well at $16.47 per share, January 20th, when the bank charter was approved, but the volume has not died down. This is the highest volume that we have ever seen with SoFi, and I think the bank charter changed the game for SoFi, and I think this is a huge sign of what is to come in the future. As far as potential upside, these are the Bollinger Bands. The green band at the bottom, green band at the top, and then the 20-day simple moving average in the middle. You'll find a lot of support and resistance around this 20-day simple moving average, as well as the lower end range of the band. This does say we are in bearish territory as we are hugging the lower end range of the band, but I do think it's going to be relatively easy to break out to the 20-day simple moving average, this blue line in between, at $13.57 per share, and that could happen in a day's time frame, and that's exactly what I expect. As far as the MACD is concerned, this is the measurement of basically market sentiment with volume and a couple other factors to give you these lines right here. When the yellow line is under the blue line, that means the stock sentiment is bearish. When it's above, that means it is bullish. So we went slightly bearish, nothing to be concerned about. And as far as the 50-day moving average, after we break out above the 20-day moving average, that 50-day moving average is at $15.27 per share. So we do have some room to climb before we get into really resistance levels. So looking good as far as the charts are concerned. I mean, it's a lot better to buy SoFi down here rather than up here. And I first started buying SoFi at about $23 to $25 per share. So I will any day buy the stock around $10 per share. So that's the scoop as far as that. Now, what you guys need to know, and what Fed Bostic said, is that, I'll just read this to you guys. He says, Fed Bostic tells the FT the central bank could hike rates by a half point if needed. Key points. The Federal Reserve isn't ruling out raising interest rates by 0.5% instead of the typical quarter-point move if inflation remains high, Atlanta Fed President Raphael Bostic said in an interview with the Financial Times. Bostic reiterated to the news outlet his call for 3 quarter-point interest rate increases in 2022 starting in March. It's largely believed that those hikes will be in quarter-point increments, though some in the market predict a half-point hike is needed to tame inflation. So definitely sounding pretty hawkish, and the markets might take this badly on Monday until we get the CPI numbers February 10th. It's all going to come down to what markets' expectations are for the Fed and what they are going to do, because the Fed basically said we're not coming out to bail the stock market out, or we're not coming in to bail the stock market out, that they have to do whatever they have to do to get inflation down. And here's the top article on CNBC at the moment. Big swings in the market are more normal than investors might expect, but things could get worse. So you're definitely seeing a little bit of hawkish, bearish tone on CNBC this Saturday or Sunday evening. That's going to be all for this video, though. If you guys found value out of it or simply entertainment, hit that like button for me, comment down below, and subscribe to the channel. Thank you for watching, and until next time, you guys take care.